Hello everyone, welcome back. Welcome to our weekly market review. It's been more than a month, but we are back to it and let's have a deeper look into the markets. Start with the total market cap, and absolutely nothing wrong with that. You can just see a really strong bull market right here. After this small consolidation, August and September, we have just been going 5 continuous strong months of positive price action. You can see once BTC does get into an impulsive phase, what happens to the market. You do have slight months where there is a consolidation, but outside of that, it is just up, up, and up. Here on the weekly, what we can see is an interesting weekly candle. You can see that it is stronger in as an engulfing, but also pretty decent volume. What we have when we get a bearish engulfing is we need follow through on the week after to confirm this as an engulfing. So we'll have to see how this week goes, but for now on the weekly time frame, this is a strong downside move. And on the daily, if you look at it, it is pretty strong. The bounces were sold off very quickly. Where we sold off to is interesting though, because this is the anchored VWAP from the beginning of this pump, and it is already supporting price up here. Also, it's in confluence with the key daily level. This was holding price while we were moving up, so there was essentially confluence here. What I would say is the levels of confluence are more relevant from Bitcoin standpoint. BTC, this is basically where Elon Musk's announcement happened, in terms of BTC, but also this was the psychological level close to the 1 trillion market cap for the entire market. Once we flip this into support, this is where the Elon Musk announcement happened. We got this big run up after that, and I'll show you something on the BTC wallet flow to make you understand what this actually is, what manifested after this announcement. But essentially those levels are so significant, and I had mentioned before that this is the line in the sand. If people are talking about doom, and they're talking about destruction and the market is finished and all that, I would say that this level, which flipped into support, this is the level that needs to break to the downside. Then we can be looking and talking about a higher time frame reversal, but until then it is just business as usual. Let's look at the 4-hour. On the 4-hour, we have a little bit of a momentum analysis as well. You can see triple divergence on the 4-hour on the RSI. Now we have a hidden bearish divergence. We have a bearish divergence right here, which can essentially, this is part of the reason why I was looking for a move back down after this initial green Monday, but also because we had this monthly open and we moved straight up. So every time you move straight up from a monthly open, you do need to anticipate for price to come back down, make that wick. So we have this divergence. Essentially what I would expect is for this to play out where we have a little bit of chop and then for price to come down. The key levels, there is a daily level, but here what I've underlined is a 1-hour block, and this is quite significant. This 1-hour block, you can see it is also aligning up with the previous support over here. So what we've done is this is where everybody was looking to long, myself included, took this bounce up, and then what we did is we made this move down. So down here it was pretty difficult. I did catch some things, but you want a confirmation, because if you look at it from all angles, it's a confirmed breakdown over here. Though the thing was, it was very low on volume, and if you're watching the tape, you would have been able to catch something here. Essentially it was because of the tape, because I saw a lot of market shorting down here, without a reaction. And also the Coinbase premium was positive. That means there was buying going on spot. So essentially, when you're breaking support but there's big shorts coming in without any follow through, spot is positive, you do know it's setting up for a trap. And we did exactly that. This bear trap has for now manifested, because you can see the kind of move we had. I think it's 4-5, it's a 8% move, so all these bears have already been finished. But we've had a lot of market selling down here as well. But for now, as of now, we have this divergence. It can chop about and play out. I would want price to either come down to the daily level or this hourly block. These are the two big levels I'm looking at to find support again. And for me, that would be a very, very good place to be managing risk for further upside and continuation, because the negation will be so tight and so close by. These could manifest into long-term swing trades, so that's essentially the perspective for all of crypto. We'll look a little bit at Bitcoin and some levels, but this is my perspective on the market right now. Here we're looking at the altcoin market cap. Don't have too much more to add apart from the total market cap, because correlation was positive. So we just had higher beta, which means higher volatility in the total market cap. But what we have is just a retest. For now, it is a potential retest of the previous all-time high. So just a breakout and a retest. And this is, if this is an A and a B and a C, this is a truncated C, which means not a lower low. It's very bullish, contrary to what people think. I mean, it is unconfirmed for now, so we do need to hold again if we get another push and then make a higher high. But here's the key level right here. It's the key level. And what I would say is, once we do something like this and price starts to find support up here, that we're going to start to continue and make a massive move back up. So this is the key statistic I wanted to speak about when it came to the altcoin market cap, that we have just only broken the 2017 all-time high and retested it as support. Guys, the amount of money that has come into cryptocurrencies over the last 3 months is beyond anybody's dreams and imaginations, and there is so much more yet to arrive. Financial Twitter is just discovering cryptocurrencies. Google has just accepted that cryptocurrencies are a part of the financial circuit. You saw that all over Twitter, that on the Google Finance page you have a cryptocurrency section now. So this is just the beginning of the real mass adoption, and it's coming whether you like it or not. There are signs of it everywhere. So it's just a retest. The upside is exponential from here. So congratulations if you survived this, essentially, because it's just tragic to see the kind of people who are so leveraged that they've pretty much lost it all on this before the big moves even happen. So you can see how volatile it can be. You have experienced it. 30% up moves in a day, 30% down moves in a day. Low liquidity in the margins for altcoins. Because of that, wicks all over the place. This is what your experienced self needs to gauge and understand and move forward with. When you want to play margin on altcoins, there are exponential gains. But if you do not know how to manage it, the losses can be exponential too. Your job is to avoid that. Stay in the game, guys, because this is it's a very rewarding game if you can stay in it. So this is for potential upside. This is what we need to look for. I would say if this breaks down, then we're in for a different market story. So key levels, we're right in the middle. Can build some kind of a smaller range next couple of days, and once we're up here, guys, just know that we're in for continuation and some big moves. Here we're looking at Bitcoin. Essentially, the total market cap chart already has us outlined the plan for what we're looking at. A couple of things I wanted to show you. So this is the parabolic. This is the primary parabolic trend line from the move which we had October to November. This is what created the primary impulse which caught everybody off guard, including me, with its magnitude. But essentially, this primary parabolic trend line has been setting the tone and giving us an idea of the momentum of this actual move on Bitcoin. And guess what? We are still holding that primary parabolic trend line. That is extremely bullish, guys. That just leaves it open to continue its parabola. And the secondary parabolic, I think I should extend it. Just in case price was looking to do something else, it would have that. But for now, you can just see, this. I had spoken about this before. You have violent moves in price. This other thing that's here is it's a GAN fan. You can see how well it had been respected. Essentially, we've broken above that GAN fan, and now we have flipped it as support as well. So here it is, guys. Everybody's asking me about the hide button. It was right here. It always used to be here. Now I'm talking to you. I want this to go away. It needs a bunch of extra clicks, but I figured out there is this right click to hide it as well. So I'm just going to deal with it if it doesn't manifest. But anyway, so we are holding this primary parabolic trend on Bitcoin, which is extremely bullish. These are the Elon Musk levels, where the announcements happen. Huge institutional flow in this entire consolidation. But I will show you something today, even, just to make you understand what kind of flow is going on, because I think that's extremely important. But what I would say is that if this is the trend line and these are the levels we have to lose to the downside, we could be in for something larger. But for now, this has just been extremely fear-inducing, very quick, very strong to the downside. Absolutely drained momentum, but also absolutely drained sentiment. Down here, after such a brilliant 20-25% retrace, where there's billions of dollars going into this asset, what you would see is people who are so emotional. You know why? Because they are over leveraged, because they don't have plans, because they are too emotionally involved in the asset, so they have no objectivity to truly gauge and understand what's going on. And just down here, I would just last night and yesterday I could see like 10-15 charts just talking about end of the market, complete destruction, it's all finished and everything is done with. So that just those are the people you need to understand how emotionally involved they are, that they can't even get an actual perspective on what is going on right here. But this has just drained the sentiment out of the market. It's reset funding. Everything has become healthy and positive again. And it's time for this to build another structure and move out of here. So if this holds, it's just really bullish, guys. Because it's nothing. We're still holding the VWAP from the previous breakout. That's about as standard a retrace as you can get. If the institutions they were buying from down here, they're supporting everything that they have bought from the 27th of January, not even earlier, just from a month ago. Whatever they have bought, they are supporting that. They're supporting their buys. Spot was positive. All the way down here, there's heavy buying going on. So for now, same perspective as the total market cap. Just a couple of levels to highlight, which make it significant. This I would expect this to hold on a closing basis. The daily level right here. So similar perspective on Bitcoin. Let's see over the next couple of days if we can get that continuation. So talking about levels, and this is basically the the wallet flows, and essentially where just a large amount of Bitcoin is being exchanged, whether it be an OTC deal or something outside of that. But you can see this is Tesla buys here. I mean, this is about $1 billion worth. These two big circles right here. This is, I mean, just our assumption, but this is around where Saylor was having his conference and teaching everybody how to do what he had done, and whatever he had done, he has done all the way up here. This is all part of what MicroStrategy was doing. Some big exchanges over here. This is about 30k, 40k Bitcoin. That size circle. So this was a really big circle, and then we found out this was just a in-house transaction on one of the exchanges. I think it was Binance. But now look at what we have on this dip. Look at the size of these transactions. This is about 100k BTC. Okay, it's about 100k BTC at about 47,000. Saylor anyway announced he bought at an average price of about 52,000. So just think about it, guys. The guy's putting in about $1 billion at an average price of 52,000, and you have people who are saying that this is done, like we're going to go to 25k from here, or we're going to go to 10k from here. Are you devoid of logic to think like that? Yes, you are devoid of logic. Yes, you have become emotional. Why? Because you lost too much money. That's what happened. And because of that, you became emotional, and you're not looking at the facts. Just look at the facts right here. That is 99,000 Bitcoin that has been exchanged from one wallet to another. People say this could be a psyop. Don't look at it. Well, we'll see, because what even Fibonacci is supposed to be something that most people in technical analysis were never taking seriously. GAN is something people don't understand. Astrology is something people don't understand either. Well, guess what? If it works for you, it works for you. And these wallet inflows. Okay, this is a huge amount of wallet inflows. So the top of this would essentially be somewhere slightly higher than 40k, right? 42,000. Has price even been able to get down there? No, it hasn't. So this is huge chunk of support, because massive buying on exchange, yes, but off exchange a lot. Did we even come down here? Everybody wanted 40k. Everybody wanted 40k. Did we get it? No, we did not. We hit 43k, and we have had our first short squeeze. So we'll see. But anyway, the thing is that these large influxes, they're creating new bases, guys. And what you have to understand is that same thing about that Bitcoin Amazon chart and that Bitcoin Nasdaq chart. That once this amount of capital is flowing in, these people are not going all in with this capital. They have a lot more sources. If their average price point is going to get too high, they can scale in. But is there enough supply for them? Probably not. The miners were selling here heavily. What happened to price? Price went up. Miners were selling 10,000, 15,000 Bitcoin right here. It's just a huge exchange happening right now. It's a change in hands. A long-term guard is shifting. These miners, their entry price points are a joke. So for them to be cashing in on a 10x or 15x, it's totally viable. They have a very large chest, and they want to cash in because they've been in this business and working hard for these kind of days to come. So it's logical, and in the end, it is what it is. There is no guarantee of what happens tomorrow with price. But the thing is that there is that narrative. There is hyperinflation, which can be a danger. There is excessive amounts of money printing. The stimulus has reached its the stimulus has been passed from the first house. It's 1.9 trillion. So there is going to be more and more companies that are going to want to hedge. Where are they looking? They're looking at their peers. What have their peers done? They've hedged pretty well. So what's going to happen? This is possibly them hedging. You don't know who else is going to announce it tomorrow, and all those announcements will just act as a further catalyst. This is Tesla announcement. Look at what it did, 38k to 55k. Tesla announcement. FOMO from the rest of Tesla's peers, big company on the S&P 500 is buying. And now, everybody has exposure to BTC. Everyone who has exposure to the S&P 500 has exposure to Bitcoin, So has it become part of an integral part of the world? Yes, it already has, So what you think that's dying? 25% correction on Bitcoin from now on, it's just a gift, That's all it is. It's a gift. So we've gotten that gift, moved out of there. Just look at this. Once price moves up from here, look at how much heavier these transactions are from here. Once price moves up from here, this is going to act as support again, So this is just how the stair step will continue. And the old guard, the shift from the old guard to the new guard, these are strong hands, Somebody who's got an average buy of 30, 40k on Bitcoin is absolutely not interested in selling right here. You, like I said it, you don't buy an asset for $1 billion plus to sell for a 20% flip. You don't do it. It's a different reason why you are doing that. You have to understand that as retail, you have to understand the mechanics of what is manifesting right before us. I tweeted about the DeFi companies, they are coins, but they are tokens, and they are big companies for the future. These unicorns, they made 30, 40, 50% corrections. Aave was down 50%. You think that's not a buy? It's no longer a shitcoin that can die to zero. It is creating a lot of capital. It is the basis of a parallel financial system that is manifesting right before your eyes. You need to adapt. You need to get it inside your head what is going on, so that you don't miss out, so that you understand, so that you are not devoid of the logic that you see on crypto Twitter. Don't be devoid of that logic. So anyway, this is the levels that I was talking about. Kind of wandered on and about, but I think those are essential things for people to understand and realize. So again, huge inflow, guys. There's no price was not devoid. Even all the way down here, the Coinbase premium was positive. Spot was just buying heavy, buying. This was more of a shakeout, for leverage. That's why funding neutralized. Was just over leveraged, too leveraged up here. All of this price action, basically all of February's price action, got wiped out on this move. In this 10 days, all of this just completely got wiped out. So it's just going to restart again. All of this will manifest into another brilliant move, because things have neutralized. Nothing is expensive. It is cheap to be long altcoins again on margin. So let's see how this manifests and where this carries on to. Traditional markets, the theme has not changed since we last left it. This is small caps against SPY, and essentially this is where we were looking at the shift in the market, and you can see that it is small caps have been absolutely dominating over the last 3 to 4 months. I would say about 5 months. And this trend carries on. We're about to approach resistance soon, but still very relevant and very strong and trending. And we have growth against value, and you can see it's breaking down. Value has been gaining strength all the way since October, pretty heavily against growth. And I would say we are still far away from what could be potential support on this. So I would say that it carries on this way until at least we get to the previous top. As you can see, this is a very large base, and you can see larger the base, stronger the move. since 2009 we were just grinding for a decade. Had a strong breakout, possibly getting a retest, but so significant in terms of how it works. And you can see how this market works. It had a 2-year window, 2007 2009, where it absolutely outperformed growth, and then it became all about growth. So we've had 2019 to 2021, we've had one move. There is potential. I mean, this is essentially where growth was unparalleled. So similar kind of thing where we had kind of a to and fro for a long time, and then growth totally dominates. This is value coming back, and if we get this retrace all the way till here, essentially probably would be one of the best times to relatively move back into growth and get that massive expansion. So I think a pretty essential ratio to be looking at. This other one we have, this is something else. We caught the initial move for that, but banks have been on an absolute roll since the end of September, and you can see relative to the SPY, we reached a significant level. I mean, this big resistance, I would say. Once this flips, this could be a deviation from a larger range. We could get a larger continuation for financials if this happens. So there's a key resistance level right here, and looking for whether this can hold for a while. But if price starts to flip up here, we're looking to get heavy into financials. And here's another one. This is retail. Retail had a big burst once we bottomed out in March, and this is a chart that I have discussed in the review before. A key yearly level, built out a huge downtrend since 2015, very steep. And just look at this move. It's been absolutely parabolic, and looking for support right here where we are finding it. If price does continue to find support here, be a good place to manage risk for retail for potential continuation of relative strength. Not only did the sentiment of the crypto market take a big hit, but also the sentiment in the traditional markets, it dropped. But we have some nice statistics to support that there is potential for continuation even in that rally. So we have the DSI, the daily sentiment indicator, and falls 60 for the first time after more than 3 months, below 60. You have a decent subset for this. I would have liked more, but it is since 2004, so it is quite significant. But what you want to see is the 3 months later, and you can see that it is all green. So you can expect some decent moves over the next 3 to 4 months. I have highlighted some segments which are showing relative strength. Apart from that, energy is another sector that has been showing incredible relative strength. So we need to buy into the strength and know that this market is trending and it has a lot of opportunities. And just find the strength, look for where it is, and put your money in those sectors. A lot of hype about the 10-year yields as well. I would say that it's not completely significant unless we start to find support above the 2% range. Until then, I think it could be just another counter wave. We are at resistance. We could continue and range in this and get to the dangerous levels near zero. So I think for now there's nothing to look at in this until we do start moving above 2.5, and then finding support at 2, and that's when it's a different story which can significantly impact the market. So a quick look at the dollar. This is something I've highlighted even in the previous review and something before. RSI was way too oversold, just needed a bit of a consolidation. These can last anywhere between 2 to 3 months before what could be potential continuation. So we're reaching the 75-day mark. I was looking at a potential short squeeze from higher up, but we got a bit of a breakdown, and then a short squeeze. This squeeze basically squeezed out most markets, had strong breakdown in Bitcoin, strong breakdown in commodities. So now we have to see if it can come back all the way here. But if it does, it would be an obvious trade because the fundamental factors are looming. I do not think a 1.9 trillion stimulus is priced in yet. So if that does seem to manifest, then we should get a continuation and a big gap over here. You can see there's not much price action at all once this relative dollar starts to break below one level. Already we have lost the VWAP that supported this entire move from 2011. We have broken below this and spent a decent amount of time. But if we break this current level, there's a big support, and we are in for a big downside in dollar and a big repricing in all assets. I think that this just becomes a big crypto party if something like this happens. Let's have a quick look at some commodities. For platinum, we got this big move, and currently we've had a retrace. Just quickly look at the 12 hour. So we have quite a decent retrace right here. And already it's a very strong move up from, just give me a second, right? So already it's a nice 0.5 retrace for platinum right here. We're getting a solid move. Just go down to the lower time frames. You can see it's looking like up only. Essentially, this is quite correlated to the dollar, what is happening. And the move is more like a shakeout move because pre-stimulus, eventually all commodities do have to go up. You can see it's quite a clean bull flag, and I would say once we break up from here, flip 1225, 1226, this range into support, you can sustain this move further up. Look at oil. Oil has just been decimating. I mean, all the demand is back, and after the big shakeout, you can end up having a big move. Currently, this is where big resistance is. If we were to get any kind of a drop in the low 50s, I would say it'd be worth looking at for a punt at continuation, because with productivity and everything moving the way it does have to, you can possibly say that this is the big shakeout before we do get a move towards the hundreds again. So that's something to keep a lookout for. Silver has been just working on shaking out as many people as possible. Essentially, this is the big level which price had to hold on a closing basis, and you can see we have been doing that. I would only be concerned for silver if we do break below this yearly level. Until then, I would say that it is fine. You can see quite volatile, but holding this yearly level on multiple tests. So I would say, if you start to find prices grinding and breaking below this, it would be trouble. Otherwise, this could just be a nice big ramp, and if you get something price start to find support about 28, 29, and we could be in for a big move even in silver. Gold has been in quite a bit of trouble, though it does not look pretty right here. Breaking, essentially gold is trying to find support somewhere, because this just look at where previously we have had any support. It's pretty down below. It's around the mid 1500s. This is where essentially price has found significantly support, for a couple of years. Before that, if we look, let's check the monthly, maybe we can find some other levels. Even on the monthly, you can see there isn't actually any significant levels up here. Let's look at the weekly. Same thing. So I mean, gold is just trying to find support somewhere, and this narrative, I think, of Bitcoin and a lot of the capital moving into there is not really helping this asset at all. This was the highlighted support level for gold, and you can see we did end up letting it go. So for now, I don't think it's a very inviting asset, considering we are still in a risk on climate, and it is having big competition from for what could possibly be its long-term replacement, as a store of value. So let's see, just not a very inviting chart. If we can flip above 1770, then we can think about price stabilizing, breaking out of this down channel. Uranium, this is the key level we were looking at more than a month ago. We have had a strong break above it. Look at where we get the reaction from, and this is for everybody who thinks anchored VWAPs have no function in the market. Dead to the cent, we got a reaction from there. So again, for uranium, a bit tricky, because if you look, support is very far down below. So price needs to form a new support. Either that, or price needs to either form a new support, or just have a strong run of continuation. So let's see. I mean, I would still fancy if we can come back down to the 15 level. That would speak volumes, because essentially all commodities would need to correct. So a preference for me and a bias, considering that I do favor further upside, is to just check if we can get some decent fib levels. Yeah, we are at the 0.5 in a lot of commodities. So there's potential possible for continuation straight up from here. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments, and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!